Welcome to the Come Join the High Life Podcast, home of the hustlers, the innovators, the gifted, and the honorable, where we stay high on love, high on impact, high on faith, and high on energy. So if that sounds like you or what you represent, you're definitely in the right place. Welcome to the Come Join the High Life Podcast. Welcome to another episode of the Come Join the High Life Podcast. I am Mr. High Life Films.
And I am Tramika Hawkins. How y'all doing? What's going on, everybody?
What's up, beautiful people? We in this thing.
Yes. How you feeling? How you doing, Mr. High Life?
Oh, man, I can't complain. If I did, wouldn't nobody pay me no attention anyways. But, it's been a good week. Been getting a couple leads in for our real estate business and, pushing the pace a little bit more going into the final chapter of this year, 2023.
More urgency.
More urgency.
Yes.
Intentionally.
100%.
How about yourself?
I'm feeling great. And I'm excited about today's episode as well because, we are expanding in our real estate business and we have the perfect person with us today on today's show. He's a loan officer, certified mortgage planner. We actually work out with this gentleman. And when I tell you, we go to the same gym and he be in there talking about he trying to keep up with us, but we be trying to keep up with him. And I'm excited for him to be on the show. He has years of experience, within this industry. And I'm excited just to really talk about it. How you doing, Mr. Willie Smith?
I'm doing great. And I'm really excited about this opportunity. I've been blessed to be in this business over 2.5 decades now. Through God's grace, been ups, downs, market cycles, all that good stuff. But the opportunity to get with some good folks like you guys that are really trying to bring the information, be able to really, give straight talk to these folks about what banking and lending looks like and what they need to do to move in this space. I'm excited to share.
Yes, absolutely. And we're excited for you to be on the show as well. So please, tell us how you got into the industry. Tell us, what you do and how you help our community.
Yeah. So, I had no intentions of banking ever. My mother makes the joke now, I hated math growing up. And so did my brother next to me. And now I'm a banker and he's a CPA. So she tell that joke every time she, gets an opportunity. But, I was blessed to go to college. And I went to college I went to college to play football. My dream was to be in the league for 15 years, I was able to live that dream for about 2 seasons. And then after that,
what college did you go to?
I went to Penn State. And I played 4 years of football there. And I was blessed to play with the Lions for a couple of years. And I played overseas with the World League of American Football, Barcelona. That was years ago. That league isn't in existence anymore. But once those dreams were over, I found myself interviewing for a job with the bank. And really had no intentions of getting into mortgage banking or anything. It just kind of, ended up happening that way. So now I look up and, 25 years later, almost, I'm still blessed to be in this space. And really it's just a blessing to be able to help folks, realize that dream of home ownership, be able to know that they can build wealth and legacy through that acquisition of real estate. And then also educating those that have been traditionally undereducated or underserved with this process. So it's just a blessing for me to be in this position.
Yeah, 100%. Sure. And man, that is just amazing. And I have
You ain't tell me that. You ain't tell me that, man. He was holding back.
He played for the Lions.
Okay, so straight talk. So the straight talk is, one, y'all, we're knowing each other, a little bit more as of late, especially with us working out. But I really am a very introverted person. For those that know me, I can, be a little silly and stuff, but I'm a little bit, to myself. And you know, that background is something that I experienced years and years ago. And you know, just a lot of times I don't lead with that. You know, you just want folks to, you know, kind of go with you based off of, you know, who you are, what you stand for, your work ethic, those things, not, you know, I like him because he played football, or sometimes it works against you. Well, he's an idiot because he played football, you know, so it can go both ways, right?
Yeah.
So I'd rather just meet folks and just come together with, you know, just where, where I am right now. And right now I'm a, you know, a man of faith. I'm a husband. I've been dating my wife since the 11th grade. I have three sons, you know, 28, 23, and 15. And I lend money and I help people, you know, build wealth and legacy through real estate. So that's who I am.
Right.
But you know, it's a couple little things in my
So
background that, you know, we could chop it up about.
I have to ask because, you know, you primarily, you know, being an athlete and then going to college for 4 years. And a lot of the times when people go to college, being an athlete, we don't necessarily know what we want to major in. We don't know, you know, what life path we're heading towards. We just want to play ball.
That's
and hope
right.
that we get drafted. So
That's right.
you know, for the people that is in this situation, I mean, what type of advice would you have for them?
Well, what I would say first is, hey, live the dream. You have to, if you want to get to that level, you want to get to the top of whatever, you know, it doesn't have NFL, NBA, CEO, you know, Nobel Beast, whatever the top of the game is, dream it, go for it, put everything in that you need to try to accomplish that dream. But on the flip side, have a plan B, you know, and I was lucky in this regard. I was raised by a single mother, 4 kids. My mother was a librarian, and she refused to let me be defined or confined by our particular situation. It was always, you're going to go to college. Like, I'm telling you, my mom was so gangster with it. And, you know, I was blessed that I was a decent ball player. Like, I had some opportunities to go to some very, very good programs. Just let
What
me say
position did you
that.
play?
I played outside linebacker. So back then, you still had the coaches would do home visits. So we talking about these head coaches, you know, Bobby Bowden, Lou Holtz, Joe Paterno, you know, Pat Dye, all of these like names. I'm telling y'all how old I am now too. So, and my mother, the only thing she wanted to know was, hey, he need to graduate. All that y'all talking about, ABC, NBC, NFL, he needs to graduate. And she held them accountable. And that's one thing that I would say about Penn State. We played, and we played at a high level. We were expected to win. But guess what? Hey, man, you got to go to class. Because what they taught us was, hey, the majority of y'all won't be in the league, or you'll have very short careers in the league, but it's all about you being productive. Are you going to be a husband? Are you going to be a positive member of the community? Are you going to be a good father? And those were the things that were planted in us. And the football just, you know, was kind of, you know, the icing on the cake. But being a good man and a good member of society was the main thing that we learned when I was in college. And I was very blessed for that.
Shout out to your mama though, because
Yeah,
ain't
yeah,
nothing
yeah.
like
Oh
a
yeah,
strong black
for real.
woman
Yeah,
holding
yeah.
it
She don't play.
down.
Yeah,
You know what I mean? Just to have that stability, no matter what your circumstances are, no matter how much money y'all got, just to have a strong black woman in your corner, that's believing you.
That's
and
right.
that just give you more to believe in yourself. You know what I mean?
That's right.
Shout out to your mama. That's what I wanted
Yes.
to say.
And she motivated. Even right now, I tell the story about when she bought that first house. And I tell this right now, it was God's grace because the numbers didn't work. The debt to income ratio did not work. That was nothing but God, but got her in that house years ago. Even right down to my grandmother ended up having to co-sign for her. And I remember the feeling that I had when we moved into that house and I had my own bedroom. And my mom hooked up that kitchen. She had baby blue cabinets. She, made that house our own, and she raised 4 of us in that house, and she paid it off, and she lives there right now. And it's just a wonderful testament to what we can do when we get the opportunity. It's my mother really did her thing.
So I must ask, when did the switch happen in regards to, you getting into the mortgage industry, real estate industry?
Well, so when I first started, I was in a traditional bank, and I got into the management training program with, back then it was Nations Bank, that eventually became Bank of America. So when I started in the retail bank, I was on the traditional banking side, opening up checking accounts, savings accounts, CDs, car loans, credit cards, and then whenever a mortgage came in, we had to refer it to someone else. But I found myself really being attracted to the lending part of it, and less about, the 80-year-old lady who comes in and wonder why her checkbook is off by 5 cents. Like, nobody even knows now what balancing a checkbook means. Nobody even knows what that is. But back then, years ago, folks used to balance their checkbook each month. And the last straw was really, a lady came in there, and she must have been in my office for an hour and a half, 2 hours, worth going through all of her transactions to find where we were off. Because, of course, the bank was stealing her money, right? So I think that next week I applied to the mortgage corp and did not know what I was getting into. Had no idea, right even down to my wife didn't even understand that I was going to 100% commission. So I went from a salary banking center manager to a commissioned loan officer, and I really didn't know what I was getting into. So when I tell you God's grace, it was God's grace.
That sounds like a risk taker to me.
Yeah, well, I can look back now and say, oh yeah, I was just taking a risk, strategic move. Back then, I probably could have did a better job of vetting it, but then I may have not have made the move. So that's why I say it was just God's grace, because, young, me and my wife were young. My first son was already born, going to 100% commission. If I would have known or really accounted for it the way I should have, I may not be here right now.
Yeah. That's crazy that you say that. We have a book club, Higher Learning Highlight Book Club, and we were just reading a book by Eric Thomas, UOU. And he talked about, leaving his hometown and going to a new place. And,
that's right.
He had a good job. He was speaking gigs and everything was going good for him. And he just picked it up and left. And how his wife he had just had his first child, and it was a little scary moment for him, but he knew that it was something better out there for him. You know what I mean? Yeah. And you knew that when you believe in yourself, it's like, ain't nothing you can put in front of me that I can't do.
That's right.
And, I feel like that's what you was feeling, the young Willie, I think he was feeling like, what, it don't matter what I do, I'm gonna knock the thing out of the park. You know what I'm saying? You're a real humble guy. What I've noticed from the time we've known each other is that you're super humble, and that kind of like, it's an example for me. You probably don't even know this, but the way you carry yourself, the way you come in there, you say you're an introvert, but we have so many good conversations. I see how you interact with everyone else that's in the gym. And I take that as a lesson for me moving forward. And even like learning your story, I come from a football. I went to college too and played football, outside linebacker. You ain't tell me, Willie. You ain't tell me. But, I really appreciate you, man. And you dropped so many nuggets to us. We were like, it would be selfish of us to not share you with our friends. And you know what I'm saying? Because you have a wealth of knowledge, you got an amazing story and all that. But I got a question for you. So how important is it to you for you to help your community?
Man, it's big, because with me being a person of faith and not perfect, let me throw that out there, but a person of faith, and just growing up in the church, having a local community, I can't even put it in words. I tell folks all the time, I owe it. It's not that I'm doing something. I owe it, right? I always was lucky and blessed enough to have that teacher to say, hey, don't deal with that group now. You don't need to sit at that table. Hey, I'll call your mama. I know who your mama, is. Or my mom saying, hey, listen, we about to go up out and do this. Yeah, you're going to be on the usher board. Yeah, you're going to go cut this old lady grass because her mama done died. We're going to go. So it was kind of like, it was put in me. And when I look at my life and see how blessed I am, I cannot, I will not take opportunities to be able to help folks because we need the information. We truly, truly, truly need the information. And I feel like God has put me in a position to be able to help folks sometimes do things that they didn't even think that they could do, right? Sometimes help them realize things that they didn't even think were possible. And I just feel so lucky to be in this position because and everything that I do, I just feel like I owe it back. I really, really sincerely feel that I owe it back.
That's serving, man. That's why you're so blessed, because you serve.
Thank you.
So I got a question for you. I'm gonna be a little step. I wanted to know. I need some strategies and some tips and some tricks and some, the little Willie salt.
Okay.
So give me a strategy for, let's say we have a couple, they're thinking about getting married. Well, they know they're going to get married, but they're investors, right? And they want to invest into multifamilies. What would be a strategy you would propose for them to do to take full advantage of like the first time homeowners or whatever loans are out right now before they get married?
I am a big component of income producing properties, especially when you have, like right now when we're here in Florida, but this podcast is probably going all over prayerfully. Right now we have one of the best first time home buyer programs in the United States. I mean, it's good, right? And going in, especially if you're not married yet, one thing that you could potentially do, if you guys are living separately, both of you can take advantage of the first time home buyer program individually. So the one person can go buy a fourplex, live in one unit, rent out the other three. The other person can go buy a fourplex, live in one unit, rent out the other three. And then when you guys get married, move out, move in together. And now both of you have an investment property, 8 units. And with the first time home buyer program is giving you down payment assistance money, or in many cases, giving you enough money to cover the down payment. Depending on what market cycle you're in, you may be able to get seller contribution for closing costs. You can get in there with very little out of your pocket and be able to start your journey to investing in real estate. Now, the one thing that I will tell clients to make sure that they understand is because there's so much information that's out there. It's a lot. Whether TikTok, YouTube, podcasts, this, that, and the other, there's a lot of information that's out there. But understand this. Don't try to be smarter than the bank, right? Because we have checks and balances and things and ways that we're going to look at it. And if you're going to be a great investor, you have to understand your part and you have to understand the bank. And it has to be a win-win situation. Lending money has been the same since the days of Babylon. We're going to get our money. Now, it's never going to be a situation where you win and we lose. Best case scenario, we win and you win too. But it's not going to be a situation where you win and the bank loses. So I say that is go in understanding. If you're going to buy a 4-unit building and get zero down or a very long down payment or a very low down payment, you have to own or occupy one of the units. You have to live there, because if you don't live there, it's considered an investment property, right? A lot of times folks say, well, that's a great question. There is no set number with it. It goes by what your intent is. So when you go to buy that investment property or income producing property, see, even if you're going to live in it, it's not considered an investment property. It's considered an income producing property. So you have to be very careful with that word, because when you say investment property, that implies that you don't live there. The bank has 3 classifications: owner occupied, second home, and investment property. That's it. So if it's an investment property, that implies that you don't live there. It's an investment. If it's a second home, it implies that you live there some of the time. Primary residence means you there all the time. So if you're buying an income producing property as your primary residence, you have to be living there. And since you're living there, the bank is going to give you a smaller down payment requirement, because we feel if it hits the fan, you're going to do what you need to do to keep that roof over your head.
Okay. So just so that I understand, and then the people that's listening to this this episode understand as well. So when you go in and you purchase a property, it's a multifamily property, and you say, hey, I'm going to live in this property.
Right.
It's considered an income producing property.
Correct.
The bank also have your secondary home, and then you have your primary home. Now, your investment property is something that you purchase and you have no intent on living there. But if you do have intentions on living there, it's an income producing.
Correct.
Okay.
Absolutely.
And also so that we're clear, if you are considering, or if you do have the intent on living there, the bank will not fund you as much. Is that
if your intent is to be your primary residence, we're going to let you get in there with a lower down payment.
Okay.
Because it becomes so it's all about risk. So what the listeners need to know is the bank is all about risk. Excuse me. So if it's your primary residence and we know that you're going to live in that as your primary residence, that's a lower risk for us. Lower risk means lower down payment. Investment property means that you're not living in there at all. So it's a higher risk. So we want a bigger down payment. Because think about it like this, right? If something goes down with your finances, everything is cool, you got all of these investment properties, and something happened, Lord forbid, and it go down. The first thing you're going to say is, y'all can have them investment properties. I'm keeping this roof over my head so me and my family straight, right?
Fact.
So the bank knows the same thing. So we saying, wait a minute, if we taking the risk on a property that's non-owner occupied, and if something goes down, that's going to be the first thing that you're going to let go. Okay, you're going to be less likely to let it go if you came up with 20, 25, 30% down. Versus if you have 0 down or a small down payment, you'll let it go. Like for instance, 2008, 2009, y'all too young for this. We was doing 100% financing investment property. We was doing 80-20 interest only on investment properties all day long. When something went sideways, hey, y'all can have it. I ain't even put nothing into it. I'll file bankruptcy 2-3 years from now, I can go buy another house. Well, from the bank standpoint, now we're holding all of this real estate that we don't want. So our listeners have to understand investment property, second home, primary residence is different. And it goes by what your intent is. Now, I'm specifically saying intent for a reason. Because again, right now, you buying this house, you intend on living in one of the units and renting out the other 3. 9 months from now, you get proposed to, and now y'all about to get married and buy a house together. Well, now your intent changes. Where people get in trouble is they go and say, yes, I'm going to live there, never take possession of the property. Okay, this is another thing your listeners need to know. The bank will come knock on that door and see if you've taken possession of that house. And if you bought a home as a primary residence and never lived there, and it's an investment property, it's mortgage fraud, you will go to jail. So don't play with it. Yeah, don't play with it. So the occupancy piece is a very, very, very big deal. So there is no set amount. And the reason there is no set amount is it could be your intent to live there. Well, what if you get a new job and you get transferred 90 days later and you didn't know anything about it, and now your intent changes? So many times the bank doesn't say you have to be in there this amount of time, that amount of time. It's your intent, and if something changes, it just needs to be logical or reasonable.
Gotcha.
I've heard I've heard some things. It might be a myth I've seen on TikTok. I don't know,
Uh-huh.
but I've seen something where like a couple will, one person gets a fourplex, the other person gets a fourplex, then they get married. Are they still eligible for that first time homeowner as a married couple?
No. So the rule with first time home buyer is this, and this is explained a lot of times wrong. The intent on the first time home buyer, and again, this isn't necessarily a banking rule, it's also how the IRS identifies what a first time home buyer is. Someone who has not owned a primary residence in the last 3 years. What you hear it explained a lot is, oh, you could not have owned a home in the last 3 years. That's not true. So let's give an example. John and Sarah live in Norfolk, Virginia, and both of them bought fourplexes and lived in one of the units. Well, they got jobs and transferred to Jacksonville, but they didn't buy a house right off the bat, right? And they say, I don't know about that Jacksonville. It's hot down there. We might not stay down there, right? So now 3 years later, they say, you know what? We're going to go ahead and buy a home in Jacksonville. Now, both of them still own fourplexes in Virginia, but now they've been in Jacksonville renting for 3 years, right? Now, since they have not owned primary residences in the last 3 years, they can still have those properties that are now investment properties in Virginia and still take advantage of the first-time homebuyer program.
Because
so it's
they were
not
income producing properties. They wasn't primary properties. Now they're getting a primary property.
Exactly. So you can own real estate and still get the first-time home buying program as long as that real estate that you own has not been your primary residence within the last 3 years.
Okay. Gotcha.
Okay. And folks say it wrong all the time.
And if it is your primary residence within the last 3 years, then you won't qualify for.
Correct. You're not considered a first-time home buyer any longer. Absolutely.
Okay, gotcha.
Absolutely.
Well, I'm glad we got that clarified, because
that's a whole
I actually
right there.
thought the opposite.
Well, yeah, and it's a lot, and things happen. So here's another case that comes up a lot. Again, I'm gonna say John again. John's, had a family member that passed away and left him a piece of property, but he got the piece of property, he inherited, but he never lived in the property, right? So now, although he owns a piece of real estate, once he shows he's never lived in that piece of real estate that he inherited, maybe a family member stays there, maybe he made it a rental property right off the bat. Now he's still considered a first-time home buyer because he has not owned a primary residence the last 3 years. So it's a whole bunch of examples on how folks are still eligible for that money, but they don't get it because they hear the rule wrong. It's said all the time, you can't have owned a home in the last 3 years. They're missing that word. You cannot have owned a primary residence in the last 3 years.
Nice.
Awesome. I'm talking about right there. That's all right. We done it. Always over now.
And another one. Here's another one too for your folks. People that had bumpy situations. Maybe they had a house before, had a short sale or a foreclosure. You had a foreclosure 3 or 4 years ago. You lost the house. Guess what? Now you can come back and do first-time home buyer again because you have not owned a primary residence within the last 3 years.
Let's go. So
That's
don't
right.
get discouraged, y'all.
That's right. Do not be discouraged.
If you've had a foreclosure or anything like that, because you heard it for yourself, you are still eligible for the first-time home buyers within that time limit. So we know that you are in Jacksonville. Compared to the rest of the world, how do you feel about the Jacksonville market?
It's on fire. It's on fire. But Florida, period, is. But Jacksonville used to be a secret. Jacksonville isn't a secret anymore. Folks, everybody wanted to go to Miami. Everybody wanted to go to Central Florida and see Mickey. Everybody wanted to go to Tampa and see Busch Gardens and etc. And Jacksonville was kind of like, kind of left off of the map, so to speak. But now Jacksonville is hot. It's not a secret anymore. And you guys know from being in an investment world, money is pouring into Jacksonville. You got to fight when the good deals come up. You got to be ready to roll because there's money pouring in from everywhere. And then the other thing about Florida, no state income tax. We surrounded by water on 3 sides and sunshine 80% of the time. When is real estate in Florida not going to be hot? when you have those type factors in place. So, but the Jacksonville, I don't even think we've even scratched the surface on Jacksonville. Jacksonville is a growth, and I'm talking about Jacksonville and surrounding areas, I guess you have to say that now, is lined up for mega growth. Mega. So if you can do something here, you need to do it. You need to make it happen because it's coming.
Absolutely. Yeah, I agree. I mean, Jacksonville is definitely growing right now. And that's one of the reasons that, I transferred or converted from Tampa to Jacksonville because of the growth and us just doing, a lot of business up here in Jacksonville. So 100%. Yes. And so what advice would you give someone that's looking to be a lender?
Well, so it's a space that you need good people in it still. You need people that, one, have a heart to help. One, folks that are very serious about helping folks with their finances. And just understand that on a daily basis, you have to bring it, because what you say, is not as simple as a yes or a no. I don't tell anybody no. I'm always, well, maybe not right now, or this is what you need to do to be ready. So, the lending space, as with most careers, good people, needing good, grounded people who are going to give solid advice, who are going to do the right thing by the client, who are going to look at the client's interests first and not necessarily the commission check, and be willing to really, really pour into, the communities and promoting and pushing, that home ownership. It's a great career. It's a wonderful career, but you better be ready to grind.
100%. Yes.
I got a question for you. How do you feel? Okay, we got the way you do business. How you feel about hard money lenders?
Well, there's a place for everybody. I think with the hard money, particularly when you're dealing with some of the properties that are a little bit out of the box, where you may need to acquire the property and then get it fixed up, and and maybe if you're trying to buy and flip. So typically with me, with the hard money, is more so acquisition, fix it up, and then resell it. It's not a long-term solution, but if used properly, it could be a solid short-term solution. Now, the issue with hard money is you also have to understand it has to be a win-win situation, right? The hard money person is taking all of the risk, most of the time. So, I believe that you want to have some education around the hard money and understanding what those terms are, and understand, what happens if you don't meet those terms, and being able to just surround yourself with the right sources to be able to make sure that you can get it done. Like, you don't need to be taking on a hard money loan and doing a fix and flip and you don't have a strong contractor, right? Because you're going to be in trouble, right? Or who can help you evaluate that deal to make sure that it does make sense? Who's going to be able to advise you to make sure that you're not over improving, which you guys have seen that before. So hard money itself isn't bad, but hard money is sometimes used in the wrong way, and it can end up getting you in a pickle.
Yeah, for sure. So whenever y'all use that hard money, go ahead. I'm sorry.
Oh, go ahead, True. Go ahead.
No, I was just gonna say, so whenever y'all using that hard money, understand that it is for short-term usage, and have a great contractor. That way you can be in and out. And
right. I'm gonna call the Holy Ghost.
Good contractors are not easy to find. So
yeah. And I can tell you too, like, it's not HGTV. See, people get caught up in that fix and flip on TV, and it's a problem. Then they go to commercial, and then they come back, and it's always all good. In real life, you ain't going to no commercial and coming back, and it's all good at all. You got to make sure that stuff is straight. And to me, if you're a new investor and you're talking about dealing with hard money, you may take a little bit less profit, to be able to have a team that's maybe advising you and helping you and making sure that you understand and you're good to go, right? Don't just make it just all about the bottom line. Again, be smart, be fiscally responsible, be financially savvy, but understand that business and that situation, dealing with contractors and dealing with comps and as renovated values and all of that stuff, going into that by yourself without guidance, it can cost you a whole lot more money than if you just got the right team together in the first place. And then as you learn and progress, then you can maybe step out there a little bit more on your own. Consider a partner or a joint venture or something where someone has something that understands, and not just your uncle who walking around and can kick and be like, oh yeah, that shouldn't cost this and blah, blah, blah. You know, you don't get to determine, the market determine how much something costs, not your uncle. Right.
So, everybody got that uncle.
That's right. That's right. So just have your team in place, you know, so that you can make it happen in that regard.
Yeah. That sounds like great advice for somebody who played football all their life.
You know, and I'll tell you this, it also comes from the place of having made mistakes. Right. And that's one thing that I preach to my sons, you know, and I, in their defense, some of the time they listening. Sometimes I have to say, son, I already made that mistake for you. You don't have to, I can tell you about that one right there. Daddy already took that one for you. Right. Now, sometimes we know folks gonna still want to do it themselves, and that's fine. But I'm the type, I've got to the age, man, wisdom, right? Wisdom is a big deal. Experience is a big deal. You know, I sit down and talk to a senior citizen all day because they're gonna drop it and give it to you, right? So sometimes folks get very reluctant to lean on folks that have the wisdom. And sometimes with me, it's not that I know, like it's all that. It may be I know because I've already made that mistake for you.
Right. And it's better to learn from other people's mistakes than to learn from your own, because it just takes way more time and energy.
That's right.
Go ahead and, you know, pick someone's brain that already done been through that experience. So
that's right. That's right. And just take it. Still make your decisions. Like, so I'm a real big believer of you make your own decisions, take input from everybody that you can get input from, and still make your own decision. Because it's that balancing act of, you know, sometimes people's opinions and what they give you is also limited to what their experience is. Sometimes that's good, sometimes it's bad. So we don't want people to put their limiting beliefs on us, but then we also don't want to totally disregard what experience says. It's somewhere in the middle that you have to meet with being able to have, you know, taking that feedback and that, you know, information from folks, but then at the same way, making sure that you're applying it to your situation and doing what makes sense.
I got a question real quick. I know you just talked about, you know, listening to your elders or going through somebody who's already had that experience. Let's talk about something that's kind of new to everyone right now. Let's talk about AI and dealing with these loan mortgages and dealing with underwriting and dealing with fraud detection. How has that affected your industry moving forward?
AI is coming. It's here. You know, the one thing that the bank is constantly focusing on getting better and better at trying to do loans faster, get approvals. Right now, everything is a sprint to who can do things the fastest. The problem is you want to do it faster, but then you also have to make sure that you're writing quality loans. So the artificial intelligence is basically allowing a regular human underwriter may only be able to look at, is going to be able to look at a finite number of files each day. Those are just the facts, right? When now this AI is getting so smart and is being incorporated into underwriting and making loan decisions, now that computer can consistently run and make decisions and review things. Like, it's so smart now, it knows how to analyze pay stubs, it can analyze bank statements, it can do all of those things that a person used to have to look at and do. The AI can review everything and then spit out, you know, the results. And now Fannie Mae and Freddie Mac are also already insuring the loans that have been underwritten by AI. So what that means is now when it's time to sell that mortgage-backed security on the back end, blah, 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 dealing with things with Fannie Mae and Freddie Mac with the certifications and stuff, it's saying, yeah, that's good. A human didn't underwrite it. The AI program underwrote it. Yeah, we're good with that. And it's just going to get more and more robust as things, come along.
And I like how we talked about this a little earlier, how you said that there's always going to be that human though that got the AI can only do so much.
Right.
Somebody got to put them eyes on it as well.
Yeah, it's always going to be a situation where, we're not there where the AI is completely taken over. There's always going to be a need for that human, especially when you're dealing with the gray areas. And there's so many gray areas with lending. There's some things that are black and white, but there's just as many things that are gray. So you still have to make common sense decisions on things that may not necessarily fall in traditional boxes as it relates to lending. But folks, the biggest thing that folks need to understand is have your stuff together when you come to the bank. Do your best to understand the process as much as you can from both sides of it, right? We'll take a football analogy. The better you can play defense better, the more you know about offense, and vice versa. You can play offense better, the more you know about defense, right? So it's fine for you to have a specialty and an expertise, or it's fine for you to have a perspective, but it's going to be that much stronger when you know the other side of the street or the other side of the coin is at least respected enough to get familiar with it, and then also understand you understanding that you need to create win-win situations. Again, like I said earlier, don't think you're going to win and the bank going to lose. It's not happening. You better win with us, but you definitely ain't winning and we losing.
Our favorite book, 7 Habits of Highly Effective People.
Win-win. Yeah, Stephen Covey, right?
Win-win or no deal.
That's right. That's right. That's right.
So I got another question for you. What are other than the first-time homeowners, what are a few other loans or other programs that they have out now that are available to investors or just regular people out here looking to get their first home that we could take advantage of right now?
It's plenty of stuff. Still, I do a lot with VA. All of our veterans, active duty, retired, the VA home loan we can do a whole show on VA. It's so many veterans, active duty, and retired military that are not taking advantage of a benefit that they've earned. It's not even logical. 0 down, no PMI, competitive interest rates. The USDA loan for those rural areas still not being taken advantage of is 0 down, low private mortgage insurance. It's a good loan. FHA still the lower down payment requirement, the 3.5%. Conventional has a 3% down loan, right? For owner occupied. The debt service coverage ratio, the DSCR loan, where investors can buy properties and not have to use any of their income, just use it based off the rental income for the property. So if you have a desire to be able to purchase a home, the products are out here. It's just a matter of making sure that you're linking yourself up with the right team who's going to expose you to the right resources to get you to where you need to be.
No, that's right. Well, you got our you got our service.
We'll like this.
We are definitely going to be connected. Hey, listen, I done wrote down some notes, y'all, and I hope y'all are also taking notes because Mr. Willie has just been dropping just gem after gem after gem and letting y'all know, what it is and how you can get approved for, a loan or what loans to be looking for and questions that you need to be asking your lender as well. So I think Mr. High Life, go ahead.
I got a question about that USDA loan. Us living in Jacksonville, what area should we be looking at if we want to get this USDA loan?
You got to get in the sticks. So you want to be out Callahan, Baker County, some parts of Yulee. Pretty much there's not a whole lot left in Duval County, but there's pieces of Baker County, Nassau County, and the surrounding areas. Is basically outside of the city limits. But Jacksonville keeps doing this, so the city limits keep getting wider and wider. But basically, you're looking for a rural area is the big piece of the puzzle when you're dealing with with USDA. And then the other thing too with folks, again, I'm excited every time I can get people's ear. Understand this. The bank, we want to lend you the money. We want to lend. Everybody I talk to, I want to lend $1 million to, right? I get paid to lend money. The bank has no shortage of money to lend. And sometimes folks get in their head, oh, they didn't want to give me the loan. Yes, we did. I want to approve everybody. Now, let me just say that for those naysayers, I do understand. I'm not confused. Throughout history, there's been some demographics that have been underserved in the bank and treated in a way that wasn't fair, right? But I will tell you now, in this situation that we're in right now, I feel that the fair lending is as good as it's ever been since I've been in banking. There's a lot of tools that are in place to keep things as fair as they possibly can be. And do not let it get in your head that we do not want to lend you money. Why would we not want to lend you the money when you're going to pay us 3 times that back? That's a great deal for us. But a lot of folks get it in their head, oh, the bank didn't give you no, give me something to hang my hat on. Make sure that your finances are straight. Make sure that your credit is responsible. It don't need to be perfect, responsible. Make me feel good about being able to give you the loan, not give you the loan and got to cross my fingers and toes that you're going to pay me back, right? Make yourself a way that you're presentable and a good risk for the bank, and get it out of your head that the bank doesn't want to lend you the money, because we do. We want to approve everybody, but it's up to you whether you can be approved or not.
Y'all heard it, folks. Y'all heard it. The bank want to give you money.
That's right. That's right.
So,
as long as you're going to pay it back. As long as you're going to pay it back. That's all.
Absolutely. So we're going to go ahead and wrap it up. This has been just an amazing episode.
I told y'all.
Yes. We thank you, Mr. Willie, for coming on the Come Join the High Life podcast. And if you don't know what High Life stands for hustler, innovator, gifted, and honorable. We are high on love, we're high on impact, we're high on faith, and we are high on energy. Which one of those resonates with you the most?
Oh my goodness. I just like the high life. The whole thing, when you told me what those things stand for, I don't like any one of them more than the other. I just like the whole concept. I like the whole concept. I'm ready for the merch. I want the link for the merch, because I really, really just like what that stand, because it's like a state of mind almost of just the positive and the energy and all of those things. So I can't say I like one over the other. I say I like the whole vibe. I like the whole vibe that High Life throws off.
Let's go. It's a state of mind. This is definitely a state of mind.
That's right.
A mindset of abundance. So you hit it right on. But you got to give us one.
Hustle.
I know. Let's go.
Ooh, we said that fast too.
Yeah. Because it's regardless of talent, regardless of regardless of whatever. I just feel if you hustle, you got a chance, right? Outside of just knowing that you're living in God's grace, and I tell my team all the time, I don't care what's going on within the market cycle, whatever. 2 things: God's grace is sufficient, and we're going to hustle. And the rest of the stuff is going to fall in place.
And there you have it. So with that being said, Mr. High Life, if you want to.
Oh, I just wanted to ask you, how can anybody get in contact with you if they want to get more information? How can they find you on social media? Or what's the best way for someone to get
all over social media, Willie Smith. Don't do Will Smith, because some crazy stuff may pop up. But just do Willie Smith, Jacksonville, Florida, and I'll pop up. And if you need to reach out, phone number to the office, 904-337-3678. 904-337-3678. Reach out. It's all good. just use me as a resource. If you in a different state, if you just wherever you're listening to this, if you want, just a resource that can, potentially help you and your family, just reach out. I'll be glad, to be able to, just help you in any way that I possibly can.
And what, I know you were saying you're here in Florida, but what other states are you licensed in?
So I'm licensed in Florida, Georgia, Alabama, and Virginia. And then my company is licensed in another 38 states, I believe it is. 39 states. So we can help the majority of, the US.
I mean, no excuses, y'all. That's what that means. No
Let's
excuses.
Go.
Man, it's Willie. I knew that you were finna bring that heat today. We talk to you every day while we're at the gym, and you always dropping some nuggets. And we truly, truly appreciate you coming here and blessing our fans and our listeners and everybody that's a part of the Come Join the High Life podcast. We truly, truly appreciate you.
Hey, I'm happy to be here. Hey, y'all got to invite me back now. Don't do me like this now. Just give me one time. I'm ready.
You said we could do a whole episode about the VA. Guess what?
Yeah.
There you go.
Yeah.
Ready to go.
Let's go.
So y'all make sure y'all stay tuned in because he will be back.
That's right.
He will be dropping some more nuggets, some stuff that you thought you didn't have a chance, but if you deal with Mr. Willie, you got a chance. You got a chance. So this has been another amazing episode of the Come Join the High Life podcast. I am Mr. Highlight Films.
And I am Tramika Hawkins.
And I want you guys to please do me one favor. Please don't forget to put some respect on your mind.
Hey.
We'll see you next time.